Hi traders, this is another short video specifically focusing on the official trend. Now, there is a difference between the trend that we perceive, especially when we have spoken about trends in previous videos. It is one of the key aspects to any criteria for absolutely any strategy, where we always say trade with the trend. Now, going off, say, a 1 minute chart, what you're going to find is that usually the trend can be deciphered going from the left of the screen to the right of the screen. If the left part is higher and the right part is lower, then generally speaking, we're suggesting that the market is going to go this way, so it's trending down, right? You could also pay attention to the EMA 50, the EMA 200, or even the EMA 6 and just say that this is now, at the present moment, the official trend. Anything that is above, say, a 5 minute chart, I'd say at least a 15-minute chart, what we're looking at is the official trend being different to what you might consider to be the trend from the left of the screen to the right of the screen. A lot of people at times will look at the EMA 50 or the EMA 200. Now, one of the things that I look at there and say that there are going to be times that the EMAs or even just looking at the chart overall is going to be deceiving, right? How we're going to follow the trend now and how you should apply it to your strategies is going to again fit within the weekly cycle. And if we can go back to the Elliott waves images, what we're going to suggest is that when you are looking at trend movement, so let's grab this diagram here, uh, even though, say, for instance, the EMA 50 is coming down at this moment here, the official trend is the one that's going this way. So even if this goes up and then there's a pullback to, say, the 38.2 or the 50 or even the 61.8 line, if it's bouncing back to this point, at that point someone would suggest that the market is now trending down. It's not. The official trend is still going up. Okay, so remember Elliott waves 1, 2, 3, 4, 5. If you are within this aspect of the market cycle, then what you want to do is apply your strategies for just calls. You can certainly, if you're more savvy with your trading ability, you can certainly trade the pullbacks that are here. You need to ensure that you meet confirmation. There's no really real way of deciphering whether or not this bounce back, this reversal from this point to this point, will actually happen off the 38, the 50, or the 61 lines. We don't know that, okay? So what we want to do for those of you that are practicing is demo the movements here, but with your live trades, if you're doing any right now, is where you make sure that your trades are in line with this official trend. Okay, so it's no longer just going off the left of the screen, going down towards the right, or just looking at some of your EMAs, because chances are that if you align your strategy to the official trend, or if you don't align it to the official trend, you're most likely going to lose trades. So again, when there's a double bottom formation happening here, and say for instance the EMA 50 is coming down this way, let's see if I can find something off the actual chart. So for example here, see how the EMA 50 is coming down this way? At this point in time, it crosses under the EMA 200, and for anyone that's a normal trader would say, you know what, this market's flowing down, it's going to continue going south. Okay, so this is the actual point where the market does fall. Now, if you take your trades off these points here, certainly you could possibly make a certain number of pips, and even look for opportunities for doing puts here. But as soon as you see structure change, so see how a W formation, an M formation happens, or a pullback like a V formation or a reverse V formation, something along those lines happens. So in this case, where the market comes down, establishes structure, and then starts moving back up again, see even up until this point here, where the market is still showing us that it's a downtrend. right? And a lot of people would also look at the correlation between this and this, or the distance between this and this, and you'd say, yep, this is continuing a downtrend, and people probably will start looking for shorting opportunities. But taking into account the double bottom formation that's happened, you need to look towards the left of the screen as well to ensure that this market is indeed confirmed to be going up, because what you want to look for when you're going against towards the left of the screen, sorry, is where you're looking for, again, the Elliott wave formation. You know, where the market comes down, you've got your 1, your 2, your 3, your 4, and then remember this fifth wave. If you can see those 5 points on the left, then this double bottom that's happening here is a justified double bottom. And so when the market then moves back up here, the official trend, even up until this point here, from here to here, let me get rid of the crosshairs. So even from here to here, this is now officially an uptrend. So you got to be able to recognize them, and if it's not clear, jump onto a higher time frame and see if it does make it clear. If it's not clear at all for you, even on a higher time frame, going up towards the 1 hour, the 4 hour chart, then possibly look for a different currency pair. Look for something else, somewhere else that's familiar. Okay, so don't get caught up in this. This is now officially an uptrend. Even though here, you probably wait till, and this is where a lot of people do it, where they'll probably wait for the EMA 50 to come back and then cross above the EMA 200. Look at how much opportunity you would have missed from, say, well, look at it from this way. Here's where the structure would have completed. So from this point to, say, this is where it crosses, for those of you trading Forex, that's a good 38 pips right there. Okay, Euro USD pair. But look at how many candles reside between here and here. Okay, so there's a whole heap of opportunities there that you could have actually traded that uptrend. So you need to be able to look for or understand where the official trends are. So again, going back to the Elliott waves, this is how I want you to start looking at the market cycles. And again, going back to the market cycle video where I think it was John's template, where how do you justify if it is an official double bottom or an official double top, is you go towards the left of your screen. You go towards the left of your screen and you look to see if you've got that 5-point move. So again, one coming down, 1, 2, 3, 4, 5. Right? If you see that 5-point move clearly, and then you see the double bottom formation happen, that's a clear double bottom. That's one that you can start trading effectively. Again, the same way going up, where you want to see clear 5 points. Say, for instance, the market has moved all the way up here and is coming back, and it's somewhere hovering around here, and you want to make sure that this is a clear a double top formation. This, for me, would be a too much of a middle move. So if I'm here somewhere and I want to make sure that this market's not going to continue going up, what I'd be looking for is clear movements between here and here. Now, if I don't see clear movements, what am I going to do? Jump onto a higher time frame and see if I can see something again. If I still can't see anything, jump back onto a higher time frame and see if I can see something. Okay, so this might be 1 up here. We can say 2, 3, 4. And we might say this is 5. And then the market starts coming down. Now, if I don't see anything more clearer, I might say, well, you know what? This is one of those instances where this might be 1, 2, 3, and then these 2 points, which normally would be the 4 and 5, would be part and parcel of 4 and 5, and so then the market pulls down, and I would be expecting most likely maybe another triple top. Now, if I see the market fall down significantly, at least past any of my, even past the 61.8 point, then what I would consider is that, okay, I'm looking for now a stop hunt high and then a market fall. So say, for instance, you could take this to be a push up, and then the market climbs down again, finishes in the red, and then I might start trading from this point onwards. But this is the second half of New York session, so what I'll do is I'll wait for an opportunity in the Asian session. So you'll come down, wait for the high up here, and then fall. Okay. If for say for instance on a 1 hour chart you've got the one 2, 3 move, and if you could probably count this as 1, 2, 3, 4, 5, maybe. If it's also not that clear, you can jump back onto, you can draw your mark in, and then jump back onto a 15-minute chart and start looking for those points. Okay, so you might start going, okay, this is climb 1, 2, 3, that's 4 here, 5, something along those lines, to see if your trades are justified. Here I'd wait for this fall to happen, go back up, and then this one to come down and close nicely below the 50. If I'm still not convinced, I'll probably wait for it to come down here and say, okay, you know what, this has just created a lower high than this one here and this one here, then there's every chance that this is now officially a downtrend. So that's how you could do it. Okay, again, you've got to kind of be intuitive here. Take trades that you truly feel confident about. If, say, for instance, you're not entirely confident about a setup, demo it. Okay, even the most proficient traders now, they still demo trade. So demo it and keep demoing it until you become more confident at being able to pick that. The more trades that you do, the more confident you'll become. But from this point on, I'd like for you to now decipher the official trends based on this analysis. Okay, so do the Elliott wave ones. Now understand this, that the market cycles pretty much are dependent on the dealers. It's not so much on where the market just kind of moves freely on its own. It is the dealers that create these cycles. It is the dealers that establish the structures that you're seeing. So combine patterns, which is the double tops, double bottoms, and the movements in between, with the Elliott wave patterns. Combine that with the sessions, so start or end of sessions. Look for specific timings. The next video is going to be about the best times to trade. So look at all of that sort of stuff, combine it, and then understand your own timing. What is it that you like to trade, and then go off of that. Okay, hope this one makes sense.